with Marianne and myself this morning is somebody who you probably have heard. Not so much, if ever, on our show, but with Dave Crossan. And I am going to give a warm welcome to Chris Whalen. Chris, thank you for being with us today.
Thank you very much for having me.
Now, Chris, we know that you're a CPA. We know that you're located in Red Bank. We know that you're a buddy of Dave Crossan's. Okay, all those things make you appealing. Especially knowing Dave Crossan and being a buddy of Dave Crossan, I trust you already. Now, you're here, interestingly, you're here on May 1st, approximately 2 weeks after we had to file our returns. And I think that's great. I would rather have had you here today, given the choice, than on April 10th, where it's crunch time and we could do nothing about it. Chris, there is so much discussion out there about tax reform and what our president, Congress, Washington has done and will do about taxes. Tell me a little bit about it.
Well, the main hysteria that's been out there for many months is the fact that there is a limitation now for people that itemize their deductions on what's called the SALT deductions, or the state and local income tax deductions. So that means that people that pay property taxes and state income taxes, the maximum that they're going to be able to deduct now within those two categories combined is $10,000. Now, for high tax states such as high property tax states and income tax states such as New York and New Jersey and California, this has made many, many taxpayers believe that it's going to, one, dramatically increase their tax at the end of 2018 when those changes are in effect. But it's also going to reduce the value of their home, because they believe that part of the reason why values are high is that people get to take a tax deduction, especially for the property taxes that they pay. And really, both of those things are really not true and are not borne out by what the full scope and breadth of the law is.
Chris, why wouldn't I think that my house has decreased in value? Now, the audience knows that I'm a Trump supporter, that I'm a Republican, but when it comes to what you're just talking about, I too feel that my home would be worth less if my taxes are higher. How is it working otherwise?
Well, the taxes are not higher, although yes, one part of your income in 2018, let's say you have a combined $20,000 of property tax and state income taxes, where only $10,000 will be deductible. Now, will that partly increase your taxable income? Of course, but that's only one part of the equation. What's usually missed in a lot of the articles is that there's a lot of changes across many parts of the tax code and the tax forms that are actually going to reduce the taxes even when you have a limitation. So, for example, we've done probably close to 450 tax returns already, plus case studies and case scenarios, and it is an extremely rare case, even with extreme losses of those deductions, where there's a tax increase. So we have to look at the net after-tax income after everything is applied. So, for example, the alternative minimum tax, which a lot of my clients were in, has really been changed, and 95% of the people that were in the alt-min will no longer be. So that's a tax decrease for everyone in that same income bracket, which could easily offset that property tax deduction loss, for example.
Chris, a lot of our listener friends are wealthy. I don't know how better to put it, but they're in the highest tax bracket, and they may own second homes. How has this affected second homes, and won't that affect the economy, and that people may be more likely not to go out and buy that vacation home?
Well, of course, the limits still apply for property taxes and interest on a first and second home. So they're in the same boat, if you will. But again, we have to look at the net after tax income. There's 99% of the time there isn't a negative impact from all the changes. Look, can I explain some of the changes that have gone on to make people understand why that loss of that deduction will not hurt them as much as they think?
I'd love you to.
Okay, so just to simplify, our income tax system is a tiered system, a tiered rate system. So everyone starts out at 0% tax, and as you make more money, that amount of income gets to a higher and higher bracket. Everyone's heard brackets before. So in 2017, it went from 0% all the way up to 39.6%. That's pretty easy for everyone to understand. The more money you make, the more tax you pay. So let's imagine, let me just explain one of the main changes that happened in 2018. Imagine all of those brackets. Let's say we have 10 brackets to make it simple, going from 0 to 39.6. Now imagine that what the new tax code does, it decreases those rates by 2 to 3%. Right, so that alone should make everyone realize that, we have less tax even on the same income. So that's number one. That's very important to remember that even with the same taxable income, we're going to be paying less tax. Now, the next thing that they did that was also a help is that when you move into those brackets in your next level of taxable income, it takes a longer time. So let's say, for example, it took you got into the 15% bracket at $50,000 back in 2017. Now you might be in a 13% bracket, but that doesn't start till $80,000. And I'm simplifying it, but so there's a lot of other changes that dramatically offset, which was part of the plan. I mean, the Republicans knew that the limitations on the SALT deductions was going to cause a taxable income increase. So they've definitely accommodated that in the rates and the brackets and the changes to the AMT. So I urge everyone the real question on home buyers' minds is, can I afford the house that I'm going to be in? Is there a negative tax consequence now to being in the same house? And 99% of the time, the answer is no. And we can easily see, I mean, like every tax return that we did this year that clients requested it, we gave them a projection based on the new law for 2018, which showed them exactly where they would be. So anyone that has a question, I urge them to call me if I could say that. We can easily do a projection for you based on your 2017 information, any adjusted or new 2018 information. We don't have to guess. We can know exactly where you'll be.
I'm listening to what I love, which is the change in law will not impact us negatively. And, of course, that makes me a lot calmer. Here is my question to you. What can I and our listener friends do today to help for next year? Is there anything that we could do because these changes have taken place to make our tax burden lower?
Well, let's just start with the fact that many of us who are W-2 employees should have seen an increase in net pay this year over last year because the payroll tax tables have changed. And everyone's been very excited about that. I do want them to be careful, though. They still need to do a projection to make sure that they're adequately withheld. Because I trust the government, but when a large change is done like this, everyone should check with their tax preparer to do a projection based on your current pay stubs. Well, and we should also, what can we do? One, we should take advantage. We still can take the mortgage interest deduction. We still can take mortgage insurance premium deductions. We can still take charity. We could still take health and medical expense deductions. And that's a very important one. The medical deductions, there is a limit for federal and for New Jersey on how much you can take. But that limitation is much lower in New Jersey. So I urge, and also people need to realize for medical, I have a really good memo I can send everyone. People don't realize what they can take as a medical deduction. And especially in New Jersey, even if it's phased out for federal, Jersey's floor is much lower. So I urge everyone, charity is still fully deductible, and medical is an area where there's tax dollars left on the table because people are not educated as to what they can deduct.
Chris, all of the, I wouldn't know how to, let's say the CNN reporters, the MSNBC reporters, and those people that listen and follow to them as if they know everything out there. they claim that all of these changes benefited only the rich. I think what you're saying is that's not the case.
No, and it's like that. I'm glad you brought that up because there's a Moody's article that I cite in some of my presentations where, it's a death knell for New Jersey homeowners. But, of course, they never give any information, any case studies, any analysis. This is not psychic ability. We know what the law is. So you'll never see on CNN or MSNBC like what I have on my website. I have videos where I describe case studies of you make $100,000, you make $250,000. So they don't offer any analysis at all. Of course, so it's fake news. I'm sorry to use the term. It's so overused today.
Don't be sorry. If it's fake news, it's fake news.
So, exactly. So, just what was your full question again?
No, my question was that the people who are big fans of CNN, the reporters on CNN, MSNBC, and all of their affiliates are basically saying this was for the rich and not for the average.
Yes. So of course, well, that's not true, and this is some of the things that I talk about, especially in my presentations. Everyone is almost everyone is getting a tax break, including people that make a lot of money, and everyone should get a break, but. Let me give you an example of what MSNBC does or CNN does when it comes to these tax breaks. So I have a great example on my website of a couple making $100,000. They rent right now. And with the new tax changes, they're going to save roughly about $1,000 off of a $7,000 tax. So as a percentage, we're looking at 15%, right? We're looking at a nice percentage savings in tax. So if I do a couple making $1 million, and they're going to save about $8,000. So now it's what they do is say, look, the rich person is saving a lot more money than the lower income person. But in absolute dollars, yes. But that higher income person has a tax of $280,000. They're only saving $8,000. So relatively speaking, it's a tiny percentage relative to the gross amount of tax. So if they were honest about the true percentage, then the lower income is making out better versus as income increases.
Why would you think that our president, Congress, anyone else who was involved in these taxes decisions, why would you think that they would stop something like the business lunch, where business people were able to fairly deduct entertaining clients, partners, etc.?
Well, no, don't forget that this is sort of a misnomer out there, that meals are still deductible as they were. So when you take me out to lunch today, it's fully deductible for you.
It's fully deductible
100%.
I'm
fascinated. It's entertainment.
How does that work when you're paying?
That's exactly. Well, I'm a creative accountant, but we have entertainment is separate from meals. So we have to remember that it's usually meals and entertainment. Entertainment are Yankee box seats, tickets to a show, some entertaining in Atlantic City. So meals is exactly as it was. If you bring out a colleague or it's a business lunch or dinner, it's fully deductible. It's still limited to 50%, but it's as deductible as it was. That's a very good question because I get that every day. People think that meals are disallowed, and that's not true.
You taught me something. You taught me something important, because here it is. For months I've been thinking that I could no longer entertain clients. Or if I was entertained by a client, they're not able to be deducting this. I'm fascinated.
Meals are meals and entertainment's entertainment. That's why in the law that they've been separate. They both were limited, but entertainment is separate, like I said, from meals. So meals are still fully deductible in a traditional sense that you would think of as entertaining somebody, as everyone would. It's a very common question.
I'm going to enjoy my lunch even more today. Chris Whalen, I want to thank you for being here today. But before you go, tell us how we can best get in touch with you, or websites, anything else that you want to offer our listener friends.
Sure. One of the best ways to reach out to me and to learn about me is at my website, which is chriswhalencpa.com, and I'll spell that CHRISWHALEN CPA.com. There's a contact page there for me. Please to write to me, ask me a question, or set up an appointment. My direct line, my direct phone number is 732-673-0510. And I look forward to helping out your listeners the same way I help out all of Dave's listeners.
You have a generous reputation, and it's coming through the year. So thank you, Chris Whalen. We do want to have you back. Appreciate you taking time out of your busy schedule.